Hello and welcome to Currency Call. Let's start with the euro, which has slumped to an 11-month low against the dollar as markets are bracing for a mass downgrade of the eurozone states. The debt crisis continues to remain a big worry for the investors, and they are exiting the euro and parking themselves in the US dollar. The single currency on your screens 1.3020 at this point. Most emerging Asian currencies saw a sell-off, with the Indian rupee skidding to a fresh record low for a third straight day. Domestic growth concerns and risk aversion is weighing onto the rupee, and traders feel that the unit may slip to about 55 rupee per dollar by the end of December 2011. The Finance Minister Pranab Mukherjee said today that the reversal of capital flows is causing forex volatility, and the fight against inflation has taken a toll on the investments.
The matter of concern at present is a reversal in such flows, leading to increased currency volatility. We have witnessed sharp depreciation of the rupee vis-à-vis US dollar in the last few months. Slowdown in external demand has led to deceleration in the growth of exports in the recent months, with the current account deficit widening to around 3%.
Well, there have been lots of reasons, domestic and international, which have been weighing onto the Indian rupee. The course from here on. For that, let's go across to Abhishek Goenka. He is CEO India Forex Advisors, and he joins us right here in Mumbai studios. Abhishek, hi, welcome to the show. Last week, if we spoke about 53, 54, there weren't many yeses on that, but 54 is right here.
I think that's the street consensus. 55 is on, but the way we have seen the markets in the last 3 days, I think before going to 55, we might see at least 2 to 3% of fall again towards maybe 52.5, and then probably a fresh rise towards 54.5, 55, because the markets moved a lot right now, and basically because of the yesterday's news in US, and of course the increased risk aversion, because they said the Europeans are creating problems, and because of which there's going to be sovereign issues. So because of that, and of course euro going down close to 130, so it's almost reaching close to the targets that we mentioned, the 125, and I think because of that the market is actually taking it a toll, I think, but we still expect one correction and then move up.
You know, you talked about the euro here, and 1.30 came in quite in a jiffy in last couple of sessions. 3 days, as you mentioned, have been quite bad in the high yielding currencies. 1.25, how soon do you see that on euro?
See, 1.25 can be in a matter of months, maybe a couple of months or maybe a couple of weeks, because the way things are, I think euro would have been at 1.25 much before. I don't know why it's been holding above 1.30 when the consensus is that I know after every meeting and after every news there is no consensus per se. So I think the euro should have gone down, and it can go anytime, I think.
You know, the euro concerns are expected to go on for some longer time, but how about the US markets, because Fed really disappointed or did not say anything yesterday?
I think they would stick on with the policy of buying long-term treasuries and short-term treasuries, because anyways QE3 is out of question right now. I don't think they are going to increase the debt ceiling further. They're not going to print a lot of money right now. So I think we cannot see a lot of supply of dollars in the market, which the market is expecting or was expecting some time back. I think they would maintain that stance, and with Europe in doldrums, I think dollar index could head towards 83, 84.
How about the Japanese market, because that's the second biggest market for India yet again? If US and Europe are going to take some time, do you think there is some solace in Japan?
So Japan, the way the currency has moved, between a very tight range of 76 to 78, 79. I think 76 is what the government is protecting at this point in time. So I don't see 76 breaking so fast. In fact, a lot of intervention is happening at 76. I would rather vouch for an 80 or 81 in US dollar yen pair, and I think that would be good levels to actually for the importers to come and buy.
Abhishek, one final question, and this one is on rupee yet again. We have talked about 55, CLSA says 58, Macquarie's latest report is talking about 56, 57. So those kind of levels, do you see them soon?
See, one thing we have to understand that predicting any levels above 52.5, which we have seen last year's high, is anybody's guess, in the market, because right now what's happening is the demand and supply of dollars. Simple. Now the importers are buying, the payables are getting bought, and we are not going to see supply from RBI or from the international fund investors. That is the reason rupee is getting into a free fall. So we all know that this is an irrational movement. It will correct heavily. But at the same time, talking about figures of 56, 57, what time horizons are we talking about? 55 is something is possible because, if I compare it with history, we saw around 30% fall in 2009, 2008, 2009. So 30% is close to 55 half from 44. That is something I am looking at, but 57, 58 becomes too bullish to say right now. And by the time euro would have bottomed down maybe at 120 or 125, I think if it moves to 55 half, I think that's good level. So, and if you add on the premiums, say the market goes to 55 and the premiums are say 2 rupees, 20 paisa for 1 year, I think amazing level for exposures to go short long term, to just hold on and sit tight on those positions.
All right, Abhishek, we'll let you go at that. Thank you so much for joining us. So top is coming in at 55. That's the consensus that really is building up in the Indian markets and the international guys as well. So we will watch out for those levels. But for now, it's a wrap on the currency call segment. Thank you so much for watching.